If you want to own an expensive piece of art like a Picasso but can't quite afford it, a thing called fractional ownership may be for you. I'm Rosemary Miller here with Maria Gracia Santillana Linares, a reporter here at Forbes, to tell us more. Thank you so much for joining me, Maria.
Thank you so much for having me.
Absolutely. So, Maria, what is fractional ownership?
So fractional ownership is actually much more common than we think it is. Think of timeshares, private jets, some yachts, even racehorses now. It's the idea that a lot of people come together and are owners of another thing that is kind of like a stock. It's treated for investment purposes, but it's not usually seen as like a company or as a vehicle for investment. So in the case of art, what we're really seeing is this kind of new trend of companies buying entire artworks and then selling shares of them to investors. There's no really other perks other than, once the artwork is sold, you get the return. But as you mentioned, is really helpful for investors who, want to diversify their assets, want to look at, more creative or cultural ways of investing and would like to own a Picasso or a Monet or a Warhol, and then just simply don't have the funds to buy it up front. And so what it allows you to do is, for a certain amount of money, whether it be hundreds or thousands of dollars, it gives you a piece of access to the returns of whatever that $1 million painting would have once it's resold again.
Yeah, because I cannot afford $1 million.
Yeah, exactly.
But Maria, so you said there are no other perks. So could you tell me, so what are the cons?
Yeah, exactly. So it really depends, varying company to company. There's a couple of companies that do this now, both, off-chain. I cover cryptocurrency here at Forbes and blockchain. And so when you look at, the market leaders off-chain, so who are purely selling, securitized shares by the SEC, the real investment and the real kind of draw to do that is to just get a share of profits when you're sold. So let's say, painting X is sold, has 10 shares available. Each share is available for $1,000. And so, you buy that, you get your $1,000 share of it. Once that piece is resold again and say that it sells for $2,000 this time, you now get the equivalent of the one share. And so if you bought it for $1,000 and it was an entire piece, now, you will get your $1,000 equivalent of the new share. And so whether that is 10% of the painting, then you'll get 10% of the reward once they're sold again.
Well, this kind of sounds like NFTs in a way. Is it an NFT?
Yeah, so that's where it gets a little bit more complicated. So that's the off-chain version. The on-chain version, you've seen a couple of companies do this thing with blockchain and bring blockchain onto the mix. And so what they do is they tokenize the share, not the actual image. There's a lot of copyright questions involved. Just because you own a painting doesn't mean that you own the copyright to it, which means, you can reproduce it, you can sell it, you can put it on t-shirts and, make a little profit off of that. And so the way that companies have kind of said, we're not going to get into those questions of copyright. We're simply going to tokenize the shares. So that means that, I buy 10 shares on a Warhol and I decide that, that investment is no longer for me. I need the cash and, I need to have access to the capital that I put in because I don't want to wait for whenever that painting is sold again. I can now sell those shares on a secondary market. And so, off-chain traditional companies will do that in their own proprietary systems. But companies like Freeport, which is kind of the company that we spoke about in the article, are doing it on-chain. And so what they do is they mint Ethereum tokens where you can go in on their platform share. So let's say you were an investor who, was interested of owning shares, but by the time that you decided that you wanted to buy those 10 shares of a Warhol, they had run out, there was no other availables, and you're just kind of sitting and waiting. I can go and then sell them on the secondary market, and you can buy them on the secondary market. So I kind of give up my rights and give up my shares to this work, and you buy them. That's all done on chain. And so, the provenance that blockchain provides is really the draw there, is that there's a record of me giving those shares to you, and you doing whatever you want with them, and for how much I sold those shares to. And so that's kind of the blockchain aspect. There's companies trying to do a little bit, the step forward and say, okay, well, what are the perks that can we give our shareholders? And so there's the ability to kind of display a digital version within a virtual gallery that they're hosting. Okay. And so, for example, Freeport, what they do is, once all the shares of the paintings are sold and they're completely owned by Freeport, and I, as a shareholder, can now go onto the Freeport website and display a digital version of the painting I own. So let's say I own 10 shares of the Marilyn, the pink Marilyn, it's a beautiful painting, had the opportunity to see it live. But I can't show it live in my person, right? I can't put it up in my apartment. I can't put it up in my office. I can't really see it live. The shares don't allow me to do that. That's not kind of a perk that comes with it. But I can, put it up on my digital metaverse gallery, if you will, and have it shown there.
So this almost sounds like it's not quite for your standard art enthusiast, someone who wants this hanging in their foyer or something. This isn't for them, right?
Yeah, exactly. It's not necessarily for your art collector because you can't really see the painting. It's more for your art investor, the person who is really looking forward to kind of invest in a piece, hold it, take care of it. Art, takes a lot of maintenance. You have to keep it within a certain temperature range to make sure that the painting and the paper doesn't degrade. And then wants to sell it again and wants to see a return on that. And so one of my favorite quotes from the entire article, right, is there's so many fees and costs and just uncertainties about this market right now that it really is for just the investor who is trying to, play with $1,000. What can I invest in $1,000? I don't know necessarily when I'll see the return on that. The art market is famously a very long art market. The average Warhol is held for 16.4 years. That's a long time. These pieces get to appreciate and stay in the hand of collectors and investors before they switch hands again. And so it's a fairly nascent industry. Masterworks, which is the company that, was one of the first to register with the SEC to sell securitized share of fractional ownership, only got that license in 2017, 2018.
So how much traction is this really gaining? Are people actually investing in fractional ownership?
Yeah, it's a small moving market. The art market as itself is it's a mighty but small pool of investors, There's not a lot of the works are bought by the same people, the same families, the same family offices. In 2022, it was about $67.8 billion of sales. The fractional art market, out of those sales in the last 5 years, so we're adding 4 other years in that metric, it's the last one that we have, was about 625 million. So we're really talking about less than 1% of the art market that is being sold fractionally. That being said, I think it's something that's coming up more in conversation within the art world and it's being reported on more. A lot because of this intersection of, blockchain technology. That is fractional ownership, you could argue, is a little bit easier done through blockchain. You think of DAO, decentralized autonomous organizations, owning, some of the most expensive NFTs that you've ever sold. That is fractional ownership, right? A group of investors come together and they all pull in however much in cryptocurrencies to buy an artwork. And then when they sell it, that kind of profit gets shared upon by that same organization. The key difference here, and I think is kind of one of the biggest points of contention when you're looking at blockchain versus non-blockchain offerings of fractionalized work, is that in a blockchain model, all investors get a vote on when to sell it and who to sell it for. So think about, a committee meeting, a vote that is put up, usually run by a smart contract, where everyone gets to say, yes, we want to sell it for this price. No, we don't want to sell it for this price. Yes, we want to sell it to this investor. No, we don't want to. In an off-chain model, all of that is centralized. And so it is these companies that have the decision of when to sell or when not to sell. So you really have to trust that entity, right? And say, I trust that entity has the correct experts that will sell it for a price that will make it worth my money, that will be open to taking negotiations and to kind of continue that line of conversation, and that will actually pay me back more than what I paid to invest in, right? That you'll see some sort of return. With such a young industry, we talked about Warhol's being held for 16 plus years. This only has about 5 years. There really is no history there to see if, people will go back on their word or will actually follow through. There's been a couple instances of sales, but it's just a very, we're still on that very short side and beginning years of a very long process. Maybe we'll see, we'll check back in 15, 20 years. And see if it's picked up and if it's really, an option for retail investors that are looking to, with whatever money they have, not millions, but maybe thousands, maybe hundreds, pop in. But we're still very much in the early days.
So what's the difference between fractional ownership and joint ownership?
So you go back to the origin, right? So you think about a joint ownership, joint patent, right? You and I created something. We now both get our names put in a patent. We own it together. Fractional ownership, there's an element of selling and buying. So we buy it from our third party, and now you own it and I own it, but we bought it from someone else. And that person can be, a singular person, it can be an entity, a company, a group. But I think it's the buying and selling really that differentiates it, legally at least, to joint versus fractional ownership.
Thank you so much for joining me today, Maria.
Of course. Thank you for having me.
Yes.